Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now let's jump straight into the TA. Taking a look at the daily chart, you can see we do have a nice retest of this support block that I gave you between 36 cents and 34 cents. And we even dipped below that, slightly below that with this wick on January 23rd. And overall, we're doing okay. If you take a look at the bottom that we printed here in October and in September last year, we've moved up from there quite nicely and impulsively. And so far, we haven't had a correction that took us down back to those lows, right? From the local top here, we did go down approximately 50%, and since that point, since that bottom there in January, we have been trying to break back up, but we are printing lower highs in this instance here. You can see all the highs are going down, and this could be a sign of weakness, obviously, and for that we need to be looking at support below. So the more you retest a support level, the higher the chances of breaking below that. So we already had a few tests over here, a few tests over here, and the next time we come back down, there's a chance we might actually drop even lower and lose that support level. So just keep that in mind. I would not buy at 40 cents right now because we're starting a rally here. If you really want to get in, that's fine, but if you were watching my videos, you would have probably been entering down here because we were making videos on Glmr when we were sitting at 15, 16, 17 cents. And I told everyone that these are really good buying prices. So if you don't have any Glmr yet, I would target 36 to 34 cents. This is an optimal entry point as of right now. Of course, you can take a look at some of these lower levels and you can set up buy limit orders based on them. So 32 cents, almost 29 cents here. All of these are valid levels, and you can set up a Fibonacci retracement as well and take a look at the fib levels and see where those line up with some of the support levels based on the video here. You can just pause the video and do this yourself. But below 40 cents, generally speaking, is a good entry. If you entered over here at 17 to 20 cents and you want to buy some tokens at 40 cents, I would say that's okay. If you want to enter right now and you don't have any tokens already, that's also okay, but just keep in mind that we could have a pullback from there and you could drop down to 30 cents, let's say. You should be ready for that outcome, and you should have some spare funds for that situation because you don't want to be going all in right now. Of course, that's not financial advice. Now, taking a look at the daily RSI, we did come back down here slightly. A nice move down to the middle of the chart and looking healthy, not doing anything extreme like we were back here in December 2023. So once we start getting overextended, that is when you might want to look into some swing trades if you're looking to dabble with swing trades. If you're not doing that, that's fine. Stay away from that. Just stake your tokens. And trust me, that's a much better option. But of course, that's once again not financial advice. So based on the RSI, nothing, we're not in the overbought, we're not in the oversold. So it's relatively neutral here. Going back to the daily chart, I want you guys to take a look at these blocks that we have above us. So this major blue block set up from 51.5 cents down to 42.5 cents. This is a major area of rejection for us. So we stayed in this area as support. Then we had one rejection over here in December 2022, another rejection here in February 2023, and then here we tried to break above, but we failed. We dropped back down, and with this next move to the upside, hopefully we'll be able to break above and then come back down and back test that as support. That is the plan as of right now. Hopefully we can have a nice move to the upside. Hopefully we keep printing higher highs and higher lows, And again, if we drop below this blue block, below 34 cents, as long as we don't go all the way down to 20 cents, we should be fine, right? Even if we go down to 28 cents, 27 cents, 25 cents, that's still good because we are printing a higher low, in the grand scheme of things. Now, let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40+ low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Taking a look at the weekly chart, this one obviously cleaner than the previous one. You can clearly see we had a very nice breakout. We talk about this in every single video. We have a downtrend, a breakout above the resistance, back test of a previous resistance, and then a retracement. So as long as we keep the 20 EMA and we hold it as support, we should be fine. We held it over here in December. We're holding it right now in January and in February. With this next leg up, we could be looking at potentially retesting 80 cents as our next major resistance level, which is the high we printed back in August 2022. We can even set up a Fibonacci retracement. The 1.618 here is going to be at 74 cents. So that is going to be your technical target if you end up breaking above the 55 cents local top here based on the closure of the weekly candle. That's something that you can target there, and from the current prices, the 1.618 is sitting at an 80% profit. So that's, again, if we break above the swing high here on the Fibonacci. If we don't, we could run into the golden ratio here and then get a rejection and then, start this local downtrend until we eventually break out. And the 20 EMA on the weekly chart, amazing support level, currently sitting at 34 cents. That's where I would be entering. Now we do have a bit of a different support block here for the weekly chart. You can see we had multiple touches off of this area here and here. And we did not end up retracing back down that low in February, but maybe in a few weeks and a few months, we might have that retracement before eventually exploding. So just make sure you have your buy limit order set up in advance. I guess that's the most important point for you to take away from this video, because if you're asleep and you miss out on a massive dip, by the time you wake up, the market could have already recovered with a V-shaped recovery, and then you're off to the races once again. So you want to make sure you can take advantage of these dips and these flash crashes with these massive wicks to the downside, kind of like what we saw here, but at a larger scale, because if we have a massive financial event that's going to crash the markets, then these wicks are going to be massive, kind of like the March 2020 wicks, right? This is what you're going to be looking at. And overall, if you zoom out, you take a look at where the 55 and the 20 EMA is, you're kind of starting to get squeezed up there. Maybe at some point you get squeezed up and you have the explosion into May, June 2024, who knows? But as long as we are in between them, we're consolidating, that's all good. Once we have the bullish cross, right after we explode, once we have the bullish cross, that's your bull market confirmation for Glmr. And that's pretty much it for this video. One last thing, let's take a look at the oscillators. The volume started coming in, that's good to see. The MACD here is printing a, probably going to do an EMA squeeze here, or a moving average squeeze, where the moving average bounces off the signal line. The stochastic is neutral, the RSI is neutral. This is a a really good point to start setting up some buy limit orders in case we get that one last dip. If you're feeling the FOMO, you want to buy in right now, like I said, you can do that, but with a grain of salt because you might dip lower afterwards. You know, just because we're very bullish right now does not mean we cannot have some bearish news thrown into the markets to scare away the, the paper hands, so to speak. But let me know, what are your targets for GLMR long term? We're going to be looking at $2.15 and $3.96 as our targets based on this Fibonacci retracement. So from the bottom here in September last year to the high from August 2022, we're looking at $3.96 as our bull market target. Of course, we're probably going to do higher than that, higher prices, but we want to stay conservative, right? We do not want to say we're going to 20 bucks just because we like the project. That's not how it works. We have to be realistic. If we start pumping at the early stages of the bull market, really impulsively, that means, things are about to change for GLMR, and then we can have those massive moves to the upside. But if we struggle around $3 to $4 and Bitcoin's already at $120,000, I would be very careful and I'd probably start taking profits. So make sure you have your targets set up in advance. That's always healthy to do. And that should be it. Thank you all for watching once again. Stay safe and goodbye.